Taxes are probably going to be the single largest expense over your entire life. And last year, I gave more money to the government than I spent on rent, transportation, food, entertainment, my gym membership, and literally every other expense I have combined. So I've done a lot of research into how to pay less tax, and I think some of what I found will be useful to you too. Because this video is not about offshore bank accounts or tax strategies that only billionaires can use. This video is just about the 3 strategies that you can use as a regular person to pay less tax. And using these 3 strategies myself, I saved $10,786 in taxes just last year. And I'll show you how at the end of the video. But to understand how to pay less tax next year, we have to understand just the basics of the tax system. America is a progressive tax system, which means as you earn more money, your extra earnings might be taxed at a higher rate than your earlier earnings. So as a single person earning $120,000 per year, last year you would pay about 10% tax on your first $11,600, 12% tax on the next $35,000, 22,000 tax on the next $53,000, and 24% tax on the last $20,000 of your income. So someone earning $120,000 per year would be in the 24% tax bracket. This is known as the marginal tax rate because every extra dollar you earn would be taxed at 24%. But in total, you would pay about $19,000 in taxes. So your effective tax rate, which is the percentage of your income you actually pay in taxes total, would be closer to 16%. But this is just federal tax. You'll also pay another 7.65% in FICA taxes, which funds Social Security and Medicare, and then you might owe state taxes too. I obviously can't cover every state in detail, so check out the resources document in the description for more information. So whenever you get your paycheck, these are probably the big tax withholdings that you're going to see. And as long as you earn an income, it's pretty much impossible to avoid paying these taxes. But even if you can't avoid these taxes, there are 3 strategies you can use to pay less tax. And by using these strategies myself, I saved over $10,000 last year. Since most taxes are deducted from your income, each of these strategies works to reduce the amount of income that you have to pay taxes on. The first strategy is by far the most powerful, but according to research by Vanguard, only 15% of people take full advantage of it. Here's the problem. Retirement is really expensive, but it's not just expensive for regular people. It's also expensive for the government, because a lot of people do not save up enough money on their own, so they count on government programs like Social Security and Medicare to help them in retirement. But those programs are really expensive, so the government wants to incentivize people to save money for themselves. So to get people to save more money for retirement, the government basically says you don't have to pay taxes on your income as long as you save that money for retirement. That's why retirement accounts, like a 401k, are such a good deal. You just save money like you hopefully would anyways, but you also don't have to pay income taxes on your contributions. This is a huge win-win because again, you should be saving anyways. So with a 401k, you can legally avoid paying taxes on over $20,000 of your income. And if you're over 50, the limit is about $30,000 of income. That is why I max out my 401k every single year. Those are insane savings. And what makes this even better is a lot of companies will literally pay you more money just to do this. So you get to save money like you would anyways, pay thousands less dollars in tax, and potentially make thousands more dollars from your company. So if that isn't the best deal in the world, I don't know what is. So again, it is absolutely crazy to me that only 15% of people take full advantage of this. Now with that said, while this strategy does reduce your tax bill now, you might have to pay taxes on this money later when you withdraw it. But depending on your tax bracket, you might pay much lower taxes or even avoid taxes entirely. I'm planning to make a video on this strategy soon, so if you don't want to miss it, make sure you're subscribed and turn on notifications. But this next strategy to pay less tax is even better than a 401k, because using this strategy, there is a very high chance that you will never owe taxes on this money. In fact, one of my biggest financial mistakes was not taking advantage of this sooner. One of the biggest risks to your financial security is the cost of healthcare. These expenses can be absolutely massive, and you might have to pay more and more as you get older. So it's super important to save money for these big expenses, but a lot of people are not planning so far into the future. So once again, the government wants people to save money for their own medical costs, and that's why they allow people to pay for their healthcare costs using pre-tax money. So in other words, if you have to pay $1,000 in hospital bills, you might not have to pay taxes on that $1,000. Depending on your health insurance and your employer, there might be a few different options, like a flexible spendings account or a health savings account. There's more information on these in the resources document. But if you're eligible, I highly recommend a health savings account. You can only open a health savings account if you're in a high deductible health insurance plan. But if you are, you can contribute $4,000 per year completely tax-free to this account. And there's a few different things that I love about a health savings account. One, you don't have to pay taxes on the money you put into a health savings account. Two, you don't even have to pay money on withdrawals as long as you use this money to pay for qualified health expenses. More about that in the resources document. 3, you can invest the money in your health savings account so that it continues to grow every year. And 4th, once you reach retirement age, you can withdraw your contributions with no penalty like it was a regular retirement account. And as long as you keep using your money for qualified health expenses, you still don't have to pay taxes on it. So a health savings account is one of the best ways to lower your tax bill because you might never have to pay taxes on this money. Really, the only downside is that you have to have a high insurance plan, and there are some limitations to accessing this money until your retirement age. But this next way to pay less tax doesn't even have these limitations, but only a fraction of people are taking advantage of it. One of the most powerful ways to reduce your tax bill is to lose money. Now, obviously, you don't want to lose money just to pay less tax. But whenever you do lose money, whether that's shares in the stock market that you sold for a loss or real estate property that you sold for less than you bought it for, you can use that loss to offset your income. So if you bought 100 shares of Tesla at $400, but then sold those shares for $200, you would have a capital loss of $20,000. You can use that $20,000 capital loss to offset capital gains. Or even if you don't have capital gains, you can also reduce your taxable income by $3,000 every year. And these capital losses roll over from year to year. So you can continue to reduce your taxable income by $3,000 each year until you've used up your entire capital loss. But here's where the magic comes in. You can intentionally collect capital losses just to pay less tax without ever actually losing money. This works because the stock market can be pretty volatile. So whenever the price of your shares dips below the price you paid for it, you can sell your shares to collect the capital loss and then reinvest in other assets so that your money stays invested. This is called tax loss harvesting, and it is legal as long as you follow a few rules. And this strategy has already saved me thousands of dollars. The resources document in the description does explain a few rules that you have to be aware of if you want to do this legally. So make sure you check that out. And while this strategy might sound a little complicated, it really isn't. And there are even some investment companies that will do this for you automatically. So by taking advantage of these 3 strategies myself, I estimate I saved $10,786 last year just on taxes. And let me show you how. I currently earn $114,960 per year as a base salary. If I didn't use any of these strategies, I would have to pay $32,399 in taxes. But by contributing the $23,000 limit to my 401k, the $4,150 limit to my health savings account, and reducing my income by $3,000 using tax loss harvesting, I was able to reduce my taxable income to just $84,810. That means I only have to pay $21,513 in taxes, which means I save $10,786 by taking advantage of all of these strategies. So if you want to pay less tax in this next year, you should, at an absolute minimum, make sure you're getting all of the benefits of your 401k, see whether you're eligible for a health savings account, and look into whether tax loss harvesting is right for you. And the resources guide in the description should be helpful if you want more information on any of these strategies. But while these strategies might reduce your tax bill in the next year, there was another strategy, which I didn't talk about, which you could use to never pay taxes again. So if you want to see how you could retire as a millionaire without ever having to pay taxes, you need to check out this video right